India's GDP growth slowed to 4.4% in Q3 FY23 on the back of a contraction in manufacturing output for the second consecutive quarter and a slump in consumer demand. In the December quarter, growth in private final consumption expenditure or private spending slowed significantly to 2.1% from 8.8% in the preceding quarter. Following the release of the official data, some experts argued that consumption was mostly driven by urban and semi-urban regions, while the rural economy was not recovering fast enough. Against this backdrop, what do select high-frequency indicators say about Q3? Like the rest of FY23, GST monthly collection was above the 1.4 trillion rupee mark in Q3 too, indicating improved economic activity. GST collections in October, November and December grew 16.6%, 11% and 15%. However, better compliance and assessment also had a hand in this. Unlike in October, the other winter months of November and December saw double-digit year-on-year jumps in peak electricity demand. Still, all 3 months saw an improvement in peak demand, indicating an improvement in economic activity compared to pandemic-affected 2021. October, November and December saw a significant year-on-year jump in passengers travelling by railway. This held true especially for the festival month of October. Revenue earnings from freight also clocked double-digit year-on-year growth in October-December 2022. In October and November, the year-on-year expansion in two-wheeler sales was not encouraging when compared to that of passenger car sales. These months coincided with the festival period following 2 years of COVID-19 restrictions. Since car sales are considered an urban-focused data set and two-wheelers indicate rural consumption, one way to read this would be that pent-up demand has perhaps fizzled out in rural areas. Adjusted for inflation, rural wages hardly rose in October and November 2022 from the comparable months in 2021. Data for December is not yet available. According to Nielsen IQ India, in Q3 FY23, the FMCG segment saw a drop in price growth in both urban and rural markets. But in terms of volume, while the urban market maintained stable positive growth, the rural one continued to decline.
My own sense is that the kind of trend that our high frequency indicators are showing is clearly indicating that even while recovery is on, the recovery is not very homogeneous or a broad base. It is more a K-shaped recovery where the people who belong to the upper 50% of the income bracket, they have come back to the spending spree, whereas the people who fall in the lower 50% of the income bracket, they are still struggling with a number of things. Firstly, the high inflation has eroded their purchasing power. Secondly, the COVID-related impact is still lingering in many ways. They may have undertaken a fair amount of, say, loans to tide over the crisis. So all of that is playing out. So it's a mixed bag, and unless and until, and this is also getting reflected into the consumer. I mean, if you look at the IIP numbers, the consumer durables in the first 9 months of the current fiscal shows a growth of 3.5%, which is not a fantastic growth, but yes, there is a growth. But when you look at consumer non-durables, they are still contracting 1.2%.
So, what do experts have to say about consumption in Q3?
There is a rural-urban divide, there's no question about it. And this is symptomatic of the K-shaped recovery. And this is not getting bridged because non-farm jobs are not growing, especially not in the MSMEs and especially not in the unorganized sector. And the reason why you're seeing the urban jobs urban economy racing away and it's showing in the consumption is because the formal sector, the organized sector has been capturing market share in the same product groups where the unorganized sector was also quite important. Rural consumption will certainly lag urban consumption as we go forward because the unemployment is much higher, wages are much lower. 54 million people went back to agriculture in 2020 and 2021.
Chief Economic Advisor V. Anantha Nageswaran has contended that the Q3 FY23 GDP print could be revised upwards. Meanwhile, a number of experts have said that India's rural economy is not recovering fast enough, with consumption being driven largely by urban and semi-urban regions. The high-frequency indicators examined here show that both sides could be right. We may only get better clarity by the second or third revision of data.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.